or so. All right, fantastic. Very good, very good. A lot of familiar names there, guys. Glad to see you all made it. Let's go ahead and let's jump right into our disclaimer. It basically says that I am not an advisor and cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So you find a candidate, an indicator, a trade setup, something, anything you like here today. My suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Okay. Well, let me start off by asking a question here, guys. And again, we'll use 1 for yes, 2 for no on all questions that I ask that are yes or no. How many of you have traded some futures before? Just give me a 1 for yes, 2 for no, just so I know my audience a little bit, know where you guys are coming from. And that's those of you that are typing in, that's kind of what I'm expecting, a lot of the same answer, which I'll give you guys a moment to answer that. And I don't care if it's oil, if it's currency, futures, if it's gold, silver, it doesn't really matter. Just futures are futures are futures. So it looks like very few people are saying yes. So the majority of you are trading, I'm going to guess, primarily stock and options, some form of options strategies, hopefully, whether it's just buying calls and puts. And guys, if you could give me some examples of some of the problems that you might incur with trading options. What are some of the things that you might run into when you're as an options trader that are maybe not the best thing to contend with? And I'll start off with an example as you guys are typing. So how about we talk about we want to have a minimum open interest of 100, right? Well, now you go and find a stock that's a phenomenal pattern and you can't find anything that's got a really good open interest on it at all. So that's kind of what I'm referring to. There we go, Noel. That was the one I was expecting to get a lot of, and you were the first one to type it in. There's a few others, but large bid-ask spreads. You go into trade Google right now or Priceline, and you see a $2.50 bid-ask spread on Priceline or a 90-cent bid-ask spread on Amazon. Well, 90 cents not that bad on Amazon. You know, it's not. Or $2 on Priceline, that's kind of normal. But at $2 is $200 you're underwater when you hit enter. Right? Wow. Big concern there. Grant said not enough for the minimum. So, Grant, if you're talking open interest, you're right. It's not enough for the minimum there. Absolutely. Rich said, my short calls go in the money on Friday at 350. Okay. Rich, that may be more the condition of the trader than what's being traded, right? And sometimes we've got to make that decision to exit out of that trade maybe before that, that time period. But I know what you're talking about. I was just managing my positions this morning. I had all kinds of problems with, I had too much stuff running on the computer, so my trade station was dying, and I had to restart the computer. And as I did, I realized that one of my long positions that I was doing a diagonal spread on, and have been for months, expires in 2 weeks. I'm like, oh, we probably should wind out of this position now, since time value deterioration is kicking in immensely and going to kill me pretty soon, right? I was up a decent amount on the profitability of it, but had I left it alone, all time value would have dissipated very quickly in the last 2 weeks. Having the amount you have in your account, right? You have to have a minimum amount, and then if you don't have at least $25,000 as an options trader in your account, you are relegated to the pattern day trader rule, which says you could do 3 intraday options trades in a 5-day period, and that's it. If you do more than that or try to, they shut you down. They don't let you get to that next trade because you're breaking the law, basically. The Securities and Exchange Act that prevents that. Yeah, but Rob, I can get around that and I can not have a margin account, and you're right. That is absolutely right. You do get around that rule. The difference is if you have $2,000 in your account and you buy a $2,000 option on Monday morning at 9:30 when the market opens on Apple, and you're in and out of that trade the same day, you've already spent your $2,000. Margin allows you to use the same money over and over again, where not having a margin account doesn't. So there are goods and bads to both. If you're only looking at, I'm going to do one trade a day anyway, then no big deal, no harm, no foul. But you can run into, just again, some of the issues that you contend with options. Now, don't get me wrong, guys, I love options. I will never stop trading them. I believe that there is a purpose and a reason to add something like futures to your portfolio as a trader. So let's go ahead and get into that. So first off, what are the E-mini contracts, right? Well, E-minis are often referred to, E-mini futures are referred to as just E-minis, or minis you'll hear them called. They're the smaller unit of the bigger grown-up futures contracts that have been around for quite a while, 20 plus years. Some of the major future contracts have been out there. Now, E-minis are fairly new, about a little over a decade they've been going on there. And the full contracts, as I said, have been over 2 decades they've been out there. So there are several futures markets that have developed both the full contract and the mini contract. The most popular is the S&P 500. Now, the ticker symbol is the ES. Now, guys, if you tried right now to type in ES into your charts, and if I just go ahead and bring up my my trade navigator there and put in ES, it's going to come up with Eversource Energy. Wait, Rob, I thought this was the futures. It is, but this is only the beginning part of the symbol. It's called the root of the contract. And we'll get into the components of it. What I'm trying to tell you is you cannot just take that ES as the symbol and say that is what we are going to use. There's a little more to it than that. After that, we have the NQ, which is the NASDAQ 100. This is the equivalent of, and guys, I'll give you some examples. I'll back up. The ES, you're basically trading the S&P 500 index or the spiders, the SPY, same thing. Here, with the NQ, you're trading the NASDAQ index or the NASDAQ 100, which is the Qs, right? With the Russell 2000, you're trading the RUT, or the IWM as in Mary, or IWN as in Nancy, same type of position. My favorite one of all, folks, right here, write it down. My favorite one of all is the Dow, which has a ticker symbol of YM. Guys, give me a 1 if my sound is okay. Let's just do a sound check there. Sound is good. Okay, I appreciate it. Thank you. So the Dow, the YM, is the ticker symbol for the Dow 30, which is also the diamonds, right? DIA. Of all 4 of these, folks, my favorite one to trade on futures is the Dow. And I'll explain the why in just a few minutes. But just as you're taking notes here, put a little star, highlight it, circle it, write a note, Rob's favorite, whatever you want to do. This, to me, is the place every single one of you should start, is trading the YM as your first futures contract to trade. And again, I'll explain some of the components of it in a moment. So what are the E-minis? Continuing on it, all of these have one major thing in common, and they are futures contract of stock indexes, of stock indices. Now, there are mini contracts on everything now, gold, silver, crude. There are REITs, real estate investment trusts, that have mini future contracts on them. You can get futures contracts on egg rolls. I mean, they make them on everything now, right? The bigger question is there enough volume in there? Because the newcomers many times are very low volume, not a lot of interest, which makes them riskier because their spreads get much larger. And we'll talk about the bid-ask spreads in a moment, and we'll compare it maybe to an options trade and see what that looks like. So let's look at some specifications on a futures contract. Now, this comes right off of the CBOT, not E as in Edward, T as in Thomas, Chicago Board of Trade. This is a copy right off of their website. And the YM is the base ticker symbol. Forget about where it says clearing. We don't care about that. Let's jump right down to the tick size and minimum fluctuation. If I look at a stock, right, if we look at any stock, it really doesn't matter what it is. If I go to, here's Groupon, right? Groupon had a great announcement today. It gapped up on their news, backing off a little bit now. Well, if I look at Groupon, again, or any other stock, the smallest tick is what? A penny. That's the smallest increment the stock can move in. It doesn't move in half pennies or quarter pennies. It moves in pennies. The increment on the Dow, if we go over and look at the Dow, and I'll bring you back to this in a little while, but the increment, you'll see 22,005. If it changes a little bit, it was just at 6, it went to 5. If it changes a little bit, it'll change. See 6, the green box. It changes by 1 cent or $1, I should say, not cent. $1 is the smallest increment. That is known as the tick to the position, right? Or for that position. So it's the tick value that we're looking at there. Well, every 1 point the Dow moves, up or down, it doesn't matter. You make, or it costs you $5 per tick. So if the Dow moves up 10 points, you'd make $50. If the Dow moved down 10 points, you'd lose or cost you $50. So the value of the tick, or the smallest movement for the Dow, is $5. And when we get into some of the other positions, I'm going to brush over it quickly to try not to confuse you, because I really want you to start with this position first. It's the easiest and the least manipulated of all the positions. Do you guys agree? 1 for yes, 2 for no. You'd rather focus on the less or the least manipulated of the positions to start in your practice trading. Does that make sense? Yeah, exactly, right? How you doing, Christina? Good to see you again, dear. Okay, now trading hours, guys, can get a little hairy, but let me try to simplify it for you. Everything is East Coast time that I'm going to use. Forget about what it says on the screen, because it's nutty crazy the way that they do it. Let's just talk about the way that I teach it or show it is this. At 6 p.m. on Sunday night, the futures market opens. No, Rob, we open on Monday. No. Futures do not open Monday. They open Sunday night at 6 Eastern. They trade all the way through the market open, past the market close of 4, and they go to 4:15 p.m. And at 4:15 p.m., write this down, from 4:15 p.m. Eastern to 4:30 Eastern, we go into what is called a halt, H-A-L-T. We stop, but it's not a close. It's a halt. We suspend trading for 15 minutes. And it gives the exchange a chance to fix any bad ticks and get back on the market again. They open back up at 4:30, and then they keep trading until 5, right? At 5 o'clock, that's our shutdown, 5 o'clock at night, and it shuts down until Monday. It's Monday night, 5. It shuts down until 6 p.m. Monday night. So 1 hour. That's the entire shutdown of the market. 15-minute halt, 1 hour shutdown. Then it opens back up again. It goes all the way again until Tuesday at 4:15. It does the same thing until Friday. Finally, at Friday at 5 p.m. Eastern is when the market shuts down. Complete, done, over. The market is closed for the weekend now, and the weekend is just Friday night through Saturday into Sunday night. At 6 p.m. we open back up again. So there's definitely more tradability available in the market when you trade the futures than there is the equities markets, whether it's stocks or options. And I realize there's pre-market and post-market trading in stocks, but they're also an extremely heavily manipulated market where futures are far from that. It is not a heavily manipulated market at all. The next thing are the quarterly cycles, or the months that we trade. So if you look at options, right? If you look at an options contract, let me open up an option chain, right? And it'll take a couple of seconds to open that option chain up. Looks like we might have broke a bottom in here. I wonder if we're going to start seeing a breakdown take place right about now. Ooh, there's a here, kitty. So my option chain will open on a different page. So just bear with me while it opens up, and I'll pull it over. I'm working off a 6-monitor computer, guys, so sometimes it's hard to find things, right? So let's see. Let's go to Apple. All right, thought I had it there. Let's go and look at Apple, and we'll look at the option chain of Apple. And what we've got here are all of these weeks and or months that we have options available for. So it comes down to, which one do I choose? Which one do I trade? Where's the market maker not putting the volatility into? Can I find something that is, untapped, or the market maker hasn't played a game with yet? And that's great. Nothing wrong with that. Now I say, okay, I like the August 18th. I'm going right for the full monthly contract. You can see all the strike prices that are available. All right. You would buy or sell the option depending on what you're trying to do. Well, what I do here is I am looking at these positions here have contracts available for March, June, September, and December. That is it. They're the only 4 months that those contracts are available. So right now I am trading the September contract. And we'll get into when you switch contracts in a little while, but we're trading the September contract right now. And that September contract goes, well, again, I'll get into the dates. I don't want to give you the details yet. But we're trading those 4 contracts, and each of those contracts has a letter associated with it. And the letters are H, M, U, and Z. H, M, U, Z. Now, the way that I really want you to write it is like this. You write the letter H, and then you have a hyphen. M, U, Z. All right, and I don't care if you write it this way or just remember it this way, but if you do it this way, the word, or we make a word out of it, it's HMUZ, right? If you try to do it without the hyphen, it becomes HMUZ. It's kind of hard to make one, right? HMUZ. And here's the thing, if you can remember that March is H, and then it's HMUZ is the word, March is H, just count 3 months out. So March, what do we do? April, May, June. And guys, literally, I'm counting on my fingers. April, May, June. Okay, great. June is HMUZ is the M. July, August, September. September is U, HMUZ, and October, November, December. December is Z, as in zebra, right? HMUZ is the way I want you to remember it. It may sound silly, but it's not, right? It's not. Because it's going to help you remember it. So that's the YM. We're going to go to the S&P and NASDAQ only for point of reference on tick and point value. So remember, on the YM, how much did I say the tick value is worth? I took it off the screen now. How much was 1 point worth? If the Dow moved up 1 point, what's the value gone up or down? How much? $5. Correct. Good. Very good. A lot of you. Wow. Excellent. Okay. So $5 is the value that we're looking at there. Perfect. Well, with the S&P 500, it's $12.50, but not for 1 point, for a quarter of a point. Well, wait a second. I got to start doing a quarter now. So if it goes 3 quarters, that's 12, 24, 36 plus $1.50, $37.50, right? I'm doing the math out loud. I know the numbers, but I'm purposely showing you what you're going to be going through. Not that it's bad. I love the S&P 500, but it is the highest manipulated market of all the futures is on the S&P 500 because of something called arbitrage. Arbitrage is when a trader, or in many cases now hedge funds, are looking at the difference of the basket of stocks, the value, compared to the value of the index. And when they see a slight deviation, I'm talking about 0.00001 deviation, they go out and buy 10 million shares of the index, sell the equivalent of 10 million shares of stock, and they hedge their risk just to make $800 on that trade, right? Which is a guaranteed income for them. And it's done it's all done by computer. So you don't have arbitrage in the YM because it's not as heavily traded of a contract as the S&P is. The S&P is definitely the most heavily traded contract. What I would tell you is if you're going to start trading more than 10 contracts at a time, when you get to that point, the Dow is probably not the best vehicle to use. 10 is good. You can go 12 or maybe 15, but you want to be trading those at the busiest time of the day if you're trading 15 contracts, just because you're pushing the limits a little bit of what's not available, but how many people are actually trading it. I like it because the manipulation is not there, but you now know the fault of it is you can't trade big numbers at one time on there. Everything else here is pretty much the same times and so forth. The symbol is ES. And then we have the NASDAQ. This is a quarter of a point for a $5 move. That's the smallest tick is 1 quarter, same as the S&P, but it's not $12.50 a quarter, it's $5. Oh my goodness gracious, Rob, how do you remember all of this? Well, I have a chart. I have a chart right up on the Emini Think Tank website that is part of a spreadsheet that I give out for free to all the members there. And you can download that chart and you will look right at those symbols, and it will tell you what the smallest tick value is and what, so the smallest tick, 1 point on the Dow, and how much each of them are worth. And it's broken up, and maybe I'll, if I get a chance, I'll bring it up and show it to you. I'll share it with you. Okay, so here are the 4 symbols, as I said. The way to remember these is H-MUZ. H-MUZ is the easiest way for me. And we're going to build a symbol in a little while because you know that YM is the ticker symbol, and you know that it has either H, M, U, or Z in it because it's the month code, And then the only last thing we need to put in there is a year. All right, and I'll show you how TradeStation builds it out because that's who I use. And then anybody else, you're going to just ask the broker. And all you would do is call the broker and say, hey, I'm trading the YM. What's the symbology for it? And they will tell you right away, immediately, exactly what it is that they're trading, that they're doing. So there are two different types of contracts. There's a continuous contract and a current contract. The continuous contract goes and adds every single symbol up from the beginning of time on that futures contract and makes it one straight continuous contract. It just adds them all together. So Rich says there is a digit at the end too in TOS. You know, I think the TOS one is /YM is their contract. I think that's what they do on it, but I'm not 100% sure, Rich. I don't remember, I should say. I've recently opened an account with them, but I really haven't used it. I opened the account because they're supposed to have some pretty dynamic tools in there. So current ES is ES /ES space U7. So Rich, if you try to not put the U7 in there, I think you'll get what's called the continuous contract. Is what it is. Try that one and tell me what happens with that if you have your TOS open. Right? So the current contract is the one we're trading right now, which is the letter U. So Rich said, yes, it does. So I'll show you that when we build the symbol. I'll draw it out for both the TOS and TradeStation then. So TradeStation symbol, the continuous is @YM. What Rich is saying is confirming, I should say, is on TOS. TOS is think or swim, guys, if you're not familiar with it. On TOS, the continuous is /YM. And the GoToWebinar does not have a text box to type something in. So I'm kind of limited to what I can actually do there. The symbology for the current trading symbol right now on TradeStation is YMU17. Now that's TradeStation. Guys, I have seen YMU7, not 17. I have seen //. I have seen .. I've seen 2017. There's no right answer. There's not. Right? It's all a matter of what your broker does. That's the important thing is right there. Just whatever your broker does, that's important to you. When we look at the breakdown, the YM stands for the symbol for the Dow 30. The U is the expiration month code for September, and 17 is the expiration year for it. So with TOS, the full contract, I don't think I wrote that one down, so let me go do that. The full contract is /YM, and it looks like Rich has got a space in there, not an underscore. I'm just going to put it so you know it's a space. U7. So it's very similar to what TradeStation does. Right? No /, no space, but all the same things are in there. And they're using just 7, whether it's 2007, 2017, 2737. Oh, so Rich is saying no space. Sorry. Okay, I'm glad I clarified that then, Rich. /YM U7. That's TOS. Think or swim. Whoever your broker is, just ask them. Yeah, no problem, Rich. That's fine. No problem. I saw the space. I saw the space or it looked like a space and copied it that way. So no worries though. I appreciate you doing the research for it. Guys, just check with your broker. They'll tell you what the symbol is. But we're going to look at YMU17 today. We're going to go see if we can't find a trade to set up. If not for now, for later. All right. So one of the things to be considering here is when expiration date is. And I've got two different things I put on this calendar. I've got red circles, which is the expiration date of the contract, and I have green, which is called the rollover date. So let's look at the red first. We'll start off with, let's go right to September since we're there. We said, well, actually we'll do March. H is March, right? I put the letter there. The 17th, 2017, the 17th of March is the third Friday of the month. Right? And then for June, on the 16th, so Avery, as far as Canadians being able to do futures on TOS, don't worry, I'm going to tell your broker you can do futures on, as a Canadian citizen, you can do futures there. TOS has gotten very finicky with what they're able to do for sure. I don't live in Canada, so for me it doesn't matter. But I know there's a lot of people here that are from Canada and have to contend with that problem. So the letter M is for June, just like a regular option, correct, Rich, but different. Bear with me for the difference, because this difference, oh, there's a Disney movie. What's that movie called? Where, oh goodness, the woman says, "Off with her head." That's Alice in Wonderland, I think, right? My kids are in their 20s now. We don't watch a lot of Disney movies anymore, but I remember they loved it as kids, right? If you don't get the, yes, Alice. Okay, thank you, Christina. If you don't get this right, guys, it is off with your head. So, Rich, you are right. It's the same as the options expiration, just slightly different, right? We get to the September, third Friday, and then December, third Friday. Okay, now, so 15, 16, 17 happen to be the dates that are available. Here's the thing. Write this down. The expiration time is 9:30 a.m. Eastern Time. That's when the contract expires. Now, you should never, ever, 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 ever be trading it that close to the expiration anyway. That's where the green circles come in, called the rollover date. So on September 7th, you should get an email from your broker that says, hey, it's rollover day. Why September 7th? It's the Thursday, the week before the expiration. Right, Rich, 9:30, right? LOL. Think of catching it at the wrong time. You're thinking it's 4 o'clock and it's 9:30, right? The 7th, you'll get an email from your broker of September, right here, where my mouse is, and it'll say, hey, it's rollover date. And they're telling you should start rolling out to the next contract. If you just use this chart, you roll out to December contract. And you'll trade the December all the way from the 7th of September until the 7th of December, right? Those 3 months, you'll trade it straight through for those 3 months, over and over and over again. Now, when you get that rollover notice, guys, that's when you're supposed to switch. Now, we do a little bit more advanced analysis. Once the rollover notice takes place, we go in and we analyze in the Emini think tank. We analyze what's going on in the market right there. What's the volume look like? The bid and ask prices, are there differences? We analyze that as a group and say, okay, you want to switch now, or, oh, no, I know it's rollover date, but you don't want to switch. So if the announcement came out on the 7th, we would be meeting on the 11th, right? I teach everybody how to do it. It's in the bonus materials. I teach them how to do that themselves, but when we get to the 11th, I don't even change my contracts over. I leave them in my, because we use a non-funded account in the workshop. I leave them in there, and we change them together. I will go through and make that change in there many times. This way you're seeing exactly that, okay, today's the date to change, right? Okay. So Rich said, do you actually have to roll it the way I roll an option, buy and sell it? No. So what they're referring to is this. If you're in an option for September, Rich, you want to get out of it, and if you still like it, you can get back in, not an option, a future. If you still like it, once you get out of September, you can enter a December contract. Or if you're flat, you're not in any trade right now, but you're getting ready to get into one, you want to get into the December. So it's not really a buy and sell type thing, although it could be. You could have been in this September contract for 3 weeks. It's just time to move on now. This is where bid-ask spread starts to get manipulated. That's where the bid-ask spread gets much larger on the contract. And if we look, I'll show you, if we look at YMZ17 right now, you can see the bid-ask spread on the Dow as a penny, 2203 by 2204, 22,004. Here we have 21,1958 by 21,1965. So you have a 7-point spread in there now, which is $35 when you hit enter, that you're underwater. Unlike the one above it, the YMU17, that we have a 1-tick spread in there, we're underwater $5 when we hit enter. That's amazing in comparison to anything that we do with an option, right? You can't touch on the option what we do here, right? We kind of backed up a little bit there. All right, it was stretched back. So I'm going to delete that one and just put a blank row back in there. It just makes it easier for me to see. It's just the way that I like to set my charts up. Perfect. All right. So Well, let's take a look at some charts. Great, we were there. So let me go back into the YM. So guys, if we're looking right now, let's analyze what's going on. So what do we see happening here? Well, I noticed that there is right now short term. Let me see if I can straighten that out a little bit. No. Okay, so let me delete it. I don't like drawing long lines here that stretch back because I don't want it to be seen as a support or resistance line. So I just try to do it with a diagonal line. This is one of the tools I would change on TradeStation if I had the ability to. All right, one more time, and if not, we're just going to stretch out with a straight line. All right, there we go. So we've got a top setting up in here, and then I have a series of bottoms that are getting higher in here right now. I actually taught this last night in the Monster Market Movers class, this wedge, this triangle. This is an ascending triangle. We're expecting a breakout to the top side, right? We're expecting to see the break move up, right? And here's our apex, or that convex of where the horizontal line and the diagonal line meets. So if I see a breakout above this upper line, I would consider a bullish entry into the trade. Could you take a trade to the downside? You could. It's just not a high probability setup. There are rules to how we take these types of trade setups. And when I say these types, I'm talking about a triangle type trade or format, right? So we're looking at this. I'd love to just take a trade right now. We're not in an ideal place. Even if we said, okay, let's just take one, we're in the middle. So no matter what I do, it's a gamble. It's a buy or a sell. We're in the middle. I wouldn't mind seeing a bounce off of this diagonal line down here. And if we got that bounce, great. I would consider taking that trade. Let me change colors around a little bit of these lines just so we know that they're the triangle. Right, so everything ties together in there. All right. All right, so let's see what happens. We're moving down. Forget about this blue line for now. I will talk about the importance of all three of these lines in just a moment. All right, this is something that I did earlier today. I'll explain the trade to you, show you what and why I did. Right, and this, by the way, is the equivalent of the market open, stock market open. This market's been open. Right, so we're pushing down right now. Let's see, 202 is our 21,999 is our current price, and we're looking at 997. Okay, guys, here's what I'm going to do. I'm just going to go ahead and we got there. Beautiful. So you'll see that there's an order bar up here. Now, I still like this better if we get the breakout on the upside. This could still fail on the bottom, right? We've got higher lows, and the tops are remaining the same, ascending triangle or wedge. So I'm going to go ahead and buy one position here. It's a non-funded account. I need to put a price in. It's a limit order. Actually, I'm just going to do it at a market. I just want to get filled. Right? Buy 1 YM at market. All right, order filled. You now see what it says there. It shows we're down $5. We're now break even. It shows me the same thing up here right now. Right, we're at a break even point. We were down $5 because of the bid-ask spread. That's what made us down $5. Right, let me bring this back to the beginning there. And let me stretch it up a little, get a little better view. All right, up $5, down $5. You guys understand the game, right? You're getting in a stock or an option, and you're running into the same types of scenarios there if you do. You know, if we go back and look at the options here, and I just want to look at Priceline, which I love Priceline as a company. I think they're a great trading company. I don't want to look at an option that expires today on Priceline, but let's go look at an option that has intrinsic value. Maybe my favorite delta to trade is around a 65. So we'll go look at an option even for next week that has a 65 delta. And here's our delta column where my mouse is. So we have a 65 delta. We're looking at 65.30 by 67.50. Right? Yowzer. $2.20 of bid-ask spread. You know, even if we get down into a much lower price position, we're still looking at, 910 by 1040. Right? 330 by 410. Bigger spreads. When we look at the Dow, we're looking at a $5 bid-ask spread on average, is what we're contending with. You may have 2 ticks, which is a $10 spread, but very small amounts of money out there. Guys, how hard is it for the Dow to move, say, 10 points? How difficult is it for the Dow to actually make a 10-point move? How fast can that happen? Is that a pretty fast occurrence for the Dow to move 10? Keeping in mind, it's Friday and it's lunchtime right now. So what do we expect to see? Slower market time. But if you look right here, guys, this price opened on this bar at 985. Each one of these candles are 5 minutes. So 5, 10, 15, 20 minutes. From 985, we ran up to 2015, we'll call it, 20015. So 985 up to 15, we moved 30 points in 20 minutes, right? If you can just get a 10-point move, I want you to think about that. If you could learn to take a 10-point move off of this twice a day, you would need $500 in order to do this trade, depending on the broker. You'd need $500 to do this trade. Once you put the $500 in and you exit the position, you could use the same $500 over and over and over and over and over and over again, without a margin account, without fear of running out of money. As long as you have cash in the account, you can continue to do that. Right, you're absolutely right, Rich. Priceline can move $2 in a minute. It's a $2,000 stock. But I have to put $500 up to do this, not $6,800 to take that same trade. Right, which is one of the bigger advantages here as a stock versus a stock. So right now we're up, we're up 0. We were up as much as 10, and you can see that up here on TradeStation, plus 10, minus 5. It shows what our highs and lows were, and right now we're plus $5, which is what it matches right here. It's in green. So we're not a big move right here. It's just kind of hanging out. Again, lunchtime on a Friday in summer. One of the worst times to be trading at all. But guys, and we'll leave this trade on for right now. So this vertical line is the stock and options market this morning. There's the 930 open. You'll notice a couple of blue lines stretching further back. There are 3 of them in total, right? And I am a big fan, whenever possible, of setting my lines to another line. I don't like when the lines just intersect and cross each other. It hurts my head sometimes when you see all of this. You're trying to figure out where it all came from. So I have a very big picture line from all the way back here, right? And probably stretches even further back than that. Right, keeping in mind, I'm going to stay with that bottom there. Let's see what happens when I stretch back. Not really. That's pretty much it. Is right there, right? So, which is fine. I just thought I saw a little further back than that. So right here is what we're focused off of, and this is very big picture. 1, 2, 3 hits on this nice run. Great run in the market there, guys. Phenomenal run, actually, in the market. Then we kind of changed directions a little bit. 1, 2, 3, 4, 5. Right? The angle got a little bit steeper. And then we changed direction even more. You can see 1, 2, 3, 4, 5, 6. We had this shorter term move up, right? But all 3 of these lines having importance to them. So what happens? All of this time as we're making this move up from back here, and I'm looking at the yellow lines. Those are the main moving averages I use, 8 and 21. From all the way back here, we kind of got flat here, but from all the way here, we've stayed above the pink line, right? And when I mean above, the pink line has stayed above. It has been the higher moving average. We finally, this morning, got across to the downside. And that cross came play right here, 935. Now, that doesn't mean it is a trading time right there. What that means is we need to start paying attention. So as we're breaking that moving average is crossing, I see this big uptrend line, and the shorter uptrend line rather, the top one. I'm thinking, okay, maybe we're going to bounce off that line. I got to be careful. I don't want to be on the wrong side of this, and we get a move like this and be underwater, 10 or 12 ticks, 15 ticks in a heartbeat. So I'm not interested in that game. So I watch and it closes below. Okay, nice. I like it a lot. What I am looking for now personally is a close near moving average, near the pink line, which is the 8 moving average, 8 EMA. I'm looking for a close near the 8, which was right here. I'm looking to see, can we open any higher? So the closing price on this one was 021, and the opening price was 021, same as the high on the next bar, on this big red bar. Beautiful. We push, we push, we push. We can't get up. We make the move down, and at 16, so let me do a horizontal. Right here where my white line is coming through, at 16 is where I'm filled on my bearish trade at that point. Well, Rob, what kind of bearish trade do you place? It's very simple. If you think a stock is going up, you hit the buy button. If you think the stock is going down, you hit the sell button. That's all there is to it. There's nothing else to consider. Nothing else for you to think about. Is it going up or down, buy or sell, market or limit price? You choose what it is. Bid and ask work the same. All of that is exactly the same. You just choose the direction it's going. Yes, Paula, stops. As an example, we have an open trade right now, right? I can go ahead and I can set up a trailing stop. If I change this to a stop market, I can set up a trailing stop on here to trail behind this by, let's say, 8 ticks, right? Or by, it's not point, it's just 8, by 8 ticks, right? So I put an order in originally to buy this. So how would I get out? Well, the opposite. I would do a sell. Oh, no. Okay. No wonder. We're not on. Let me click on the chart. Let's see. Why is it not? There we go. I was in stock, not futures. There we go. So let's try that again. So we'll go to a stop market. Not limit, market. We'll check the trailing stop box. We'll go with 8 ticks right now, and we bought it, so we're going to sell. Right? Sell 1 YM with a stop with a trail of 8. I click yes, and there's my trailing stop. It shows that if I am triggered, I will be underwater $40 on this trade. Once again, not the right place to place the trade, guys. We just did it to show the example. We're letting it run as I teach so you can watch it in the background. But good question, Paula. So guys, I entered the trade where this red arrow is. 9:52 in the morning was the entry price at 22.016. Right, that's where we got into the trade. Okay, now we started moving down, and the question was, where does it go? Well, I stretched back, and you'll hear me use a sentence over and over, or a phrase over and over again. Look left. Guys, I'm a huge advocate of utilizing what's back in history to help me understand where my support and resistances are. As a harmonic trader, I trade with nature. Usually I'm entering the trade before most other traders are getting in, and I'm getting out as most other traders have just decided to enter the trade. It's just my methodology of how I use technical analysis does that. So you'll see this very long trend line down here, right? Long term, going back much further, right? So we're going to zoom back in, and I'm targeting that as my stop, as my exit. So as we get down, I want you to see, I'm moving in, there we go, as much as I have to. You can see the wick comes down and strikes right on that blue line, which is 21,971 is my exit. Well, if I got in at 22,016 and I subtract 21,971 from it, it gives me 45 ticks. Right? Well, 45 times 5, what does that mean? Well, guys, I have a calculator that is on the Emini Think Tank site. And if I had just one contract and this is the YM, and we had a 45 tick move up or down, it doesn't matter. It doesn't distinguish from that. You'd be up $225 in about 18 minutes is what our move was. Now, I did 10 contracts, not one. I did 10 contracts, right? $2,250. Of course, everything we do, as we said in the beginning, we talk non-funded trades, right? Doesn't matter whether I did them are real or not. These trades work, guys. They work. I just can't show you legally my funded trades. I am not licensed, and I really do not want to be. So we're up $5 right now. We were up as much as 15. Now we're up 10. We were up actually as much as 20 on our position, right? Guys, what a great move on this today. And we had similar moves today on the Australian dollar. And I'm a big fan of trading the Aussie. We had a very similar move. That's a 1-minute chart. Let's go to a 5. We had a very similar move on the Aussie, which I got the Aussie as well. And guys, depending on how you traded it, you could have traded it using as little as $160 to enter this trade. Right? That to me is an ideal way to do this. Small amount of risk, small profit, right? I would have made $30 on this trade with $160 out of my pocket to do the trade. Or you could have traded the full contract, which I needed a little bit more money to do, but instead of $30, I would have made $300. Right? The one that I missed, which was a little bit of a disappointment, was gold. Right? That gold represented a $1,200 move for every contract. And I was focused on the YM and on the Australian and did not see this happening. It was too late when I finally caught it. Completely spaced and missed out on it. But listen, I'm okay. If you make a little bit of money for the day, I am not really worried that you might have missed out on one trade. So it looks like we're about to get stopped out. You can see, maybe not. Oh no, we have a $25 risk now because our stop keeps moving up, right? So when you ask that question, Paula, about the stops, you'll see that it's at 25. Why? Because our stop keeps going up higher based on it being a trail of what we push to. So we've got $25 at risk in this trade right now. Right, so guys, E-mini broker, you can use any broker that you choose. I work with a broker called Trade Pro Futures, and when you go to their website, you will find a special link under on their website for Wealth Builders HQ, and it will allow you to have a $2,000 account minimum, $500 per contract on the YM during the regular trading days. 5 to 6 is a little bit more at night if you're holding overnight, and your commission is about $5. It changes slightly depending on what you're trading, but for Dow, NASDAQ, the S&P, and the Russell, it's about $5 per contract to trade them, right? If you just call up Trade Pro Futures, speak to Trey, T-R-E-Y, Trey, and tell him that you're from Wealth Builders HQ, he will give you the same exact deal that he's got on his website for it, guys. But for those of you that are in Canada, you can use Trade Pro Futures to trade your futures contracts without living in the U.S. Legally, legitimately, piece of cake, right? Very, very, very easy to do. I know it may be a hassle that you now have to open another account, but I don't know what else to do. I know Lisa had called me and said, hey, Rob, I am struggling, because Lisa's in Canada, and saying, hey, I'm struggling and I can't find a broker that doesn't want to rip us off. Right? And we're talking about $15 she was getting quotes on the round trip versus $5. Round trip just means you're paying for the entry and the exit at the same time. And that's how most futures brokers, actually I don't know anybody that does it different. They charge both commissions up front. The entry and the exit is done up front. Right? Everyone I've ever used does. Right? And there are plenty of them out there. Your call on who you want to use. Right? So guys, the continuous training here, how do you get good at this? I teach a workshop every Monday night, right? It's a trader talk. We call it the E-mini Think Tank. And it comes on, it's each and every Monday evening. We just had one, obviously, the other night. The next one is this upcoming Monday, right? It's 8 to 10 p.m. Eastern. Even if you can't be there live to watch it, it's recorded for you, right? We record them for 30 days. There's a bonus video library, and actually I will share it with you and show you. If we go into the members area of my site, Wealth Builders HQ, and I scroll down and I go into the E-mini Think Tank right here. So there are bonus videos that are here and documents, right? So my trading plan, right? There's something here called Net Time Setup, which helps you to set up your internal clock of your system so you're not running at the wrong time. It's a free app. One of my students, Rick, has done a lot of work in these bonus materials and putting documents like this together. I think that Net Time Setup is 20 pages long with screenshots of everything he does. Timers to get countdown timers on TradeStation for free. Disable Windows Auto Start. My Power Hour setup, not the workshop I'm teaching next week. My Power Hour setup on how to trade that with futures. I go through all the basics of E-minis in this video. Here's the Trade Pro brokerage account. This was Trey from Trade Pro talking about the account. And then my tick calculator, which is what I showed you here, right? And I've got multiple things in there. I've got that. I've got my Fibonacci sequence inside of there. I have a calculator for my 4, 3, 2, 1 exits, the month codes, and so forth. right? A part of it. Then you've got the 4 videos, the 4 most recent videos that we did live are posted up there. I try to put them up there the same night of the event if I can. It all depends on how fast GoToWebinar converts the file from their format to a format of MP4 that everybody else can read, right? So this is what's on the website. There's another video going here that I'm working on right now where I'm going to do some of the trade entry things that we did here. We're going to go ahead and do that. So guys, we're up $35 right now. We did not get stopped out. We're up $35 right now. I am going to just go into my orders, right? I've got my open positions. I'll show you there's a trailing stop in place, right? Let me make it bigger. Stop type trail, right? So you can see we're doing okay there on this position now, up $35. I like it. That's the highest we've been up yet at this point, right? So there's the bonus video library, right? You can trade the market almost 24 hours a day. You also learn hedging techniques. Actually, one of the biggest advantages I hear from my students always, and I have now, I've been teaching this guys for about 2.5 years. One of the biggest comments I hear from my students is learning to trade the futures at night with me has made them better options traders. Why? Because you learn patience, grasshopper. You learn how to wait for the right trade setup. At night, you cannot afford to be careless and you might get right. Careless is careless, but at night it can be really bad. So by learning that patience, it will make you, not might, it will make you a better options trader. You're going to gain insight into trading economic reports. And it's not just economic reports during the day, guys. There are reports at night. So as an example, I use a website called Forex Factory. And you'll see, if we look now, this is, let's see. So here's Tuesday, all right, so Monday. So we start at 8 o'clock at 9:30 at night. The Australian dollar has a report coming out. Let's see, that's tentative. The Japanese yen at 11:45 has a report coming out. You can see what's going on in Europe, right? 2 a.m., 2:45, 6 a.m. we've got a report in the U.S. But we trade off of these reports as well. Last week we took a 30-some-odd point move, 48-point move, which brought us in $480 on the full contract, and this is at night using $1,100 or something like that on TradeStation, a little bit less on the other brokers like TradePro. And then so much more. Guys, the education, the experience, the camaraderie that you get there of being able to hang out with other traders that are doing this day in and day out is a tremendous benefit to everyone that is in there. So guys, the E-mini Think Tank, it is normally $995. That's the normal rate for it, right? But that's not what it is here, right? I had this conversation with Lisa before we got started and with Eric. What are we going to do, right? So we discounted it down to $695 for that here. But we talked about it a little bit further and said, you know what? We're going to do one more step. And as an early bird, meaning this is really the first time I'm announcing this openly to the entire group here at Mastermind Traders. And because of that, we decided to drop it down to the $595 as the early bird price. And guys, your bonus is on top of that, you get your first 2 weeks for free. So what does that mean? Your decision is really not today. Your decision today is, do I really want to learn how to do this? You need to go ahead and get enrolled and take advantage of that first 2 weeks. And once you do, then your decision is, am I staying or not? It's not today. Go through, you have access to all the bonus materials. You'll have access to the previous videos that I've recorded, the 4 that are up there from the last 4 weeks that we've done this, right? That really is your way in. There is not, Rich, no. There's not, right? So, guys, when you look at this at $595, and it is a quarterly subscription. That's what it comes down to. It's for a quarter. It's not a month. It's a quarter. So maybe that's what you're, oh, sorry, Rich, I read it wrong. Rich said, is that a monthly cost? Yeah, it is a quarterly cost, right? So it will auto bill as a quarterly subscription for you if you decide to stay with it. If not, no harm, no foul. It's great to have you in there. I love educating people on this. To me, guys, there is a reason for using options and a reason for using futures. Your futures trading should be the trading that you do for paying the bills. you should get to 0 bills off of what you make on futures, and then what you make on options, what you trade on options, should be your building wealth. That's really what you want this to become for you, right? Is your wealth builder there. All right. So, ladies and gentlemen, it has been an honor and a privilege to be able to spend some time with you. It looks like we held every one of you right up to the very end, which is fantastic. Guys, I want to wish you the best of luck. God bless. Lisa's got a pop-up or a link in the chat box that you guys can go ahead and click on, and it'll give you access to the first 2 weeks for free. Right? If you've taken advantage of this before, don't. You're not going to like the end result, guys. It will charge you if you've already done this before. It's one time only. So that's all it is. It's just the way the system is built. So with that, ladies and gentlemen, Rich says, thanks, Rob. This was great. Yeah, awesome. And listen, guys, I love teaching this stuff. Right? Oh, by the way, folks, you're going to see an email coming out. On Monday is another workshop I'm going to be teaching. Keep your eye open for that email and get yourself registered for that free class as well. That one is going to be just a little bit different than this, right? Ladies and gentlemen, have a great day. God bless. And I will see all of you in the E-mini Think Tank on Monday night. All right, take care now, folks. Bye.